Right, good morning everybody. Hope you can hear me. Right now, the most probably the last session on group accounts. I think I spent already 3 weeks. Oh, yeah, 3 weeks on group accounts. So today I am trying to discuss something about income statement and associates. Right. So group income statement and associate companies. And if you can remember, we just started, we completed balance sheet part or statement of financial position. Now today we are going to discuss something about consolidated income statement. Accordingly, you can remember, I did one question, if you can, the last week. It is about this question. From this question, we learn how to split profit of tax into two. Profit attributable to parent and NCI. Right, so that's a point we learn as first point. So therefore I'll start with the second question. About this one. Yeah, we are with this question we are going to add another principle. It's about intercompany sales and purchases. How to recognize intercompany sales and purchases into group financial statements. Right. Just see this question. Income statement is given as at 31st December 15. And A Limited purchased 80% of shares in the other one subsidiary B Limited on 1st January 2013. On that date, retained earnings given. Right. Retained earnings on that date was 40,000. A Limited sold 80,000 worth of goods to B Limited during the year, and the above value includes markup of 25% on cost. However, B Limited's closing stock includes 1/4 of goods sold. It means, if you can remember, this is something related to unrealized profit adjustment. There's one principle relating to group financial statement. Already we have learned all these adjustments. Those are not new adjustments. We learn all these unrealized profit adjustment, unrealized profit on sale of goods, as well as unrealized profit on intercompany sale of property, plant and equipment. Both we have covered under the balance sheet or the statement of financial position. Now only thing we are going to see the impact of those adjustments to income statement now. Right? So actually now we have done all the adjustments for balance sheet or the statement of financial position separately. And now we are doing all adjustments for income statement, and thereafter we can merge these together, income statement and balance sheet. So we'll do one question today. With that, I'm planning to complete the group account section. So then intercompany sales and purchases. So intercompany transaction should be eliminated in full. So therefore there is intercompany transaction of 80,000 sales. We have to eliminate that 80,000 in full. So therefore what we have to do, we have to subtract 80,000 from turnover. One side it will be turnover, on the other hand it will be purchase. Therefore we have to subtract 80 from cost of sales as well. Right? So it is kind of intercompany transaction cancellation. So there is 80,000 worth of goods sold to B, A sold to B. That means it will be sale to A, but it will be purchased to B. But when it comes to group concern, it is not a sale or purchase to the group. Therefore, we have to eliminate in full. Right? So that's what I did. Also, we have to calculate about unrealized profit included in this. If you can remember, we already calculated unrealized profit and we passed double entry in the balance sheet, if you can remember. How do you record the double entry? If the parent sell goods to subsidiary, what is the double entry for unrealized profit? I told you every time seller's retained earnings debit and consolidated inventory credit. So therefore in the balance sheet, if you can remember, when you sell goods from one party to other party inside the group, seller's retained earnings means maybe consolidated retained earnings if parent sell goods to subsidiary. If subsidiary sell goods to parent, so then seller will be subsidiary, then subsidiary's retained earnings debit. And we credited to consolidated stocks, or we actually, if you can remember, we subtracted under current assets. Understand? So then here what we have to do, consolidated retained earnings means it includes current year earnings as well. Therefore, now current year earnings in the income statement, right? So then how do I adjust it in this the income statement? We can adjust it in two ways actually. One thing, seller's retained earnings debit means we have to subtract, we have to reduce gross profit by that unrealized profit somewhere here, right? So it's one way. Or if you need, you can add it to cost of sales. If I add it to cost of sales, what happens again? Okay, closing stock overstated means cost of sales already was overstated. Sorry, cost of sales understated. Understand? So therefore what we need to do, closing stock overstated means cost of sales understated. Now due to this unrealized profit, so first you calculate unrealized profit. How much is it? Unrealized profit is 80,000 goods sold during the year. Out of that, only 1/4 remain in the stock. It means 80,000 divided by 1/4 means 4. 80,000 divided by 80 divided by 4. It's 20,000. This should be divided by markup. Now this is at selling price, no? Worth of goods, yes. Therefore we have to divide it by 125 into 25. Then it will be how much? Unrealized profit is 4,000. Yes, 4,000. Unrealized profit is 4,000. Now, what is double entry? If it is in the balance sheet, retained earnings debit, consolidated is who sold it? A Limited. Parent sold to subsidiary. Therefore, consolidated retained earnings debit and credit to consolidated stocks. But here, when it comes to income statement, as a result of overestimation now, actually the real meaning of this is as a result of this unrealized profit of 4. Already I have explained this unrealized profit term and everything in the balance sheet. As a result of this unrealized profit of 4, my cost of sales has been undercasted. Because closing stock overcasted, therefore cost of sales undercasted. Therefore, what should I do? I should add 4,000 to cost of sales. Then what happens obviously? My cost of sales will be increased. That means understated cost of sales will be restated. At the same time, what will happen to my gross profit? It comes down. Understand? Those are the only two adjustments, new adjustments we have in this question. So therefore we can now complete the answer. Time of one by one I had to go back. 300 plus 250 minus 80. Then revenue will be 470. Cost of sales 100 plus 100 minus 80 plus 4 is 124,000. Cost of sales 124. Then gross profit will be 346. Then other income, is there any change for the income? No adjustments for the income. Therefore, we will take as it is other income. $35. And administration, distribution, everything I'll take together. No issue, no adjustments for these. Therefore, I'll take everything together. 30 plus 60 plus 45 plus 30 plus 20 plus 10. Everything together 195. No investment income this. 195 all expenses. And profit before tax will be 186. Then income tax 50, no change. Then it is 136. This is profit from operation or profit for the year. Now what is next thing? We have to split into two, attributable to parent and NCI. How do I take it? If you can remember, last week I gave you good easy way. What is subsidiary's profit for the year? 40,000. 40,000 into, is there any adjustment that we have done for the subsidiaries column in this case? No adjustment. There is 180,000, it was cancelled from A to B. However, it's not kind of adjustment there. Unrealized profit also adjusted to parent. So therefore no adjustments for B. I gave you a formula, if you can remember, to calculate this figure. NCI one. How to calculate it? Subsidiary is profit. Subsidiary is profit for the year plus or minus adjustments. Adjustments into NCI percentage. So here 40,000, there is no adjustment, into acquisition percentage 80 means 20%. 40,000 into 20 means it's 8,000. 8 will be this part, then it's very clear, balance will be 124. 120, not 4, 128, no? 128. How to take 128 if you need? Now, what I did here, I found out, I calculated the NCI portion and balance allocated to the parent, right? So, otherwise, if you need to calculate the profit attributable to parent, how should I calculate? 128. How to calculate this thing? 128. Parent's total profit for the year. How much? Parent's total profit for the year. Look. Here 100. Subsidiary profit 40. Out of 40 we got 80%. 40 into 80% means 32. Right? And here, how much is it? Can't you see Workings? Okay. Proper means it's quite difficult to write all because questions are little big. We can't use a pen or the finger to write. on the screen. That's why I use the mouse to write everything. Otherwise we have to type, then it takes time. Then this 100 minus 4, it is 96. What is 4? This is adjustment for unrealized profit, if you can remember. Right? So then 96 plus 32, it will be 128. So there are two ways to do if you need, but for the examination purpose, I encourage students to take NCI first, then balance just allocate for profit attributable to parent. It's easy. Otherwise, if you take a big question, it will be difficult to find what is profit attributable to parent. Understand? This is very simple question. Now look, from the first question we did for the income statement, we learned only one principle. What is the principle? How to allocate profit for the year as profit attributable to parent and NCI. So that's what I do here. Look, these two. Right? So then from this question what we learn, how to incorporate intercompany sales and unrealized profit into income statement. Look, from each question I try to add only 1 point, if you can remember. Only 1 point. Most people do not take it. From the last week question, first question I did for income statement, I gave you this principle. How to allocate profit attributable to parent and NCI. Then I told you a very basic formula. How to allocate the for the parents part, this part, parents profit plus or minus adjustment. That's what I took here. Parents profit plus or minus adjustment plus subsidiaries plus or minus adjustment into parents percentage, acquisition percentage, this one. Sum of that two will be equal to profit attributable to parent. I gave you this formula last week. How do you find out NCI? Every time you take, again I have written here, this one. Subsidiary, this is subsidiaries. Subsidiary is profit. You take subsidiary is profit for the year actually. Subsidiary is profit for the year plus or minus adjustments into NCI percentage. NCI percentage. It will be profit attributable to NCI. This sum. Understood? In addition to that, we learn one principle in this question. Intercompany sales should be eliminated in full. That's why we subtracted sales from this sales 80 as well as this purchase 80. If one entity sell to another entity, to one entity it will be purchase sales and to other entity it will be a purchase. Therefore purchase and sales should be cancel each other. Understood? Also, if there is any unrealized profit, when you prepare balance sheet, we have to subtract it from consolidated inventories or stocks. At the same time, from the income statement, we can add it to cost of sales because you will use your closing stock to calculate cost of sales. Unrealized profit means your closing stock will be overcasted. Closing stock overcasted means already calculated cost of sales has been undercasted. Therefore, my cost of sales should be increased. Then I added 4 or here unrealized profit to cost of sales. As a result of that, my gross profit will be decreased. Right? It's another principle we learn. Just see this question. I don't want to do anything because answer is there. I'll explain answer. In this question, we are trying to prepare income statement as well as statement of owner's equity. I'll use different color. Right. A limited purchase 16,000 of the 20,000 issued rupees 1 share capital on in S on 1st April 2010 for 33,000. 16,000 shares out of 20 means it's very clear. First point you need to learn is acquisition percentage. It's 80%. It's very clear. That is first point you need to draw. The balance of equity in S on that date was 35,000. Issued share capital of 20,000 plus retained earnings of 15,000 at the date of acquisition, right? No impairment of goodwill. Fine. Acquisition happened on 2010. Right? But now we are in 2013. Then we have draft income statement, distribution cost, administration cost, and everything is there. Investment income is there. So then income tax expense also there. Right, fine. Then what about the question? Then summarize statement of changes in equity. This is also given. This is statement of owner's equity. Right. Then there is dividend here made by subsidiary. This is parent and this is subsidiary. This is parent, this is subsidiary. And yeah, that's all about facts. There is no intercompany transaction here. Therefore, straightforward. No adjustments for the first line. We take revenue as it is, 900. No adjustments for cost of sales. Take as it is, 650. That's sum of that two. No adjustments for distribution cost. Take as it is. No adjustments for administration cost. Take as it is. Sum of that two. Then profit from operation we can take as 103. There is investment income in parents column of 4,000. What it would be, if you can guess? Look, what is it? Subsidiary has paid a dividend of how much? 5,000. Subsidiary has paid a dividend of 5,000. Sure, out of 5,000, 80% will be received to whom? 80% will be received to parent. Therefore, 5,000 into 80% means it is how much? 4,000. Look, parent has recognized it as dividend income. 5,000 into 80%. But you know now, subsidiary has paid dividend to parent. This is kind of intercompany transaction. Therefore, you should understand to the group column, we should not take any amount of dividend or other income. Why? That other income or investment income is received from subsidiary to parent. Subsidiary has recognized it as a dividend paid in their statement of owner's equity. Parent has recognized it as an income to their income statement. So therefore, when it comes to group perspective, it is not an income. Understand? So then, we should not take any amount of investment income to the group column. Then finance expense, no change. We can take as it is, 11. Right? So income tax expense, no change. You can take as it is, 38. Up to that level, you should not have any problem. Then here we are adding another principle, if you can remember. In very first question for the income statement, we learned how to split profit for the year as profit attributable to group or parent and NCI. Second question, we learned how to cancel intercompany sales and purchases, as well as how to recognize unrealized profit into accounts. Now this is third question relating to group income statement. We are learning one principle again, how to recognize intercompany investment income or intercompany dividends into books of accounts. Understood? So if it is fully from subsidiary, we should not take into group column. Right, now the balance part of the same. 54 is a profit for the year, or we call it profit after tax. We have to split into two. Already we have learned this principle. How to take this NCI 2.4 in this sum? How to take it? Very clear. Subsidiaries profit for the year, plus or minus adjustment. No adjustments in this question. Therefore, what you can do? 12 into 20% will be NCI 2.4. In the exam, it's very easy. Balance to be allocated to attributable to parent. It means from 54 you can subtract how much? 2.4. 54 minus 2.4, 51.6 should be group profit attributable to parent, this one. Understand? We need to verify it. How to take it? How to verify this balance? This one. Parents' profit for the year 76. Sorry, not 76. 46. Parents' profit for the year 46 plus or minus adjustment. We had only one adjustment in this case, minus 4 intercompany dividend. Then it is 42 plus subsidiaries profit for the year 12 plus or minus adjustment, no adjustments in this question, into 80%. 80%. It is how much? 9.6. It is 51.6. That's how we take profit attributable to parent. Nice. So it is done. We are going to learn a new part for this. This red colored one. We are going to prepare statement of owner's equity. How to prepare statement of owner's equity? Look, total equity attributable to equity holders of parent and NCI. And this is NCI part. Every time we have to find in equity statement, equity balance at the beginning of the year plus or minus profit for the year and dividends. We have to subtract. Look at what is profit attributable to equity holders of parent at the beginning of the year. This is little difficult, therefore we don't want to focus that much, but just see how to do it at least. You can remember this is total equity, yeah? Not only now, usually in equity statement we can see share capital and individual reserves separately, but here we are trying to calculate total equity. Equity means capital plus total reserves. Now you can see beginning balance. Parent here 78,000. It is purely to parent, the group, plus subsidiary 48. Out of this is total equity of the subsidiary at the beginning of the current year. Understand? This is total equity of the subsidiary at the beginning. This is, I am referring this one. This is total equity of the subsidiary at the beginning of the year. Out of this, parent will receive only equity earned after the acquisition. What is earnings or the equity earned after the acquisition? Then from this thing you have to subtract pre-acquisition equity. Pre-acquisition equity. That means equity on the acquisition date. How much on the equity on the acquisition date, if you can remember? Look, it is given. Equity on the acquisition date is how much? 35. Equity on the acquisition date 35. Equity as at beginning of the year 48 means difference of 48 minus 35. Difference of 13 earned after the acquisition. Out of that 80% is belongs to whom? Belongs to parent. Look the way that I have calculated. How do you calculate equity at the beginning of the year? Again, there is general formula. The parent's total profit 78,000. Not profit, made a mistake. Total equity. Parent's total equity at the beginning of the year 78,000. It is fully belongs to the group plus post acquisition equity. This is post acquisition equity. What is post acquisition equity? Look this up. Post acquisition equity is how much? 48,000 minus pre acquisition 35,000. It is 13 into 80%. It means 10,400. Then 10,400 plus 78 is equal to 88,400. That's how we calculate total equity of the group at the beginning of the year. Total equity of the group at the beginning of the year. How do you calculate NCI? Non-controlling interest, very simple. Out of 48,000, we don't want to consider they are pre and post because everything to others. Therefore, 48,000 into 20%, that is NCI percentage, 9,600 is to, look, the calculation is given there, this one, 9,600 is to NCI. Then total will be 98,000. Already we have calculated profit for the year from the income statement, if you can remember. Profit attributable to parent 51.6 here and 2.4. So therefore we can take as it is 51.6 and 2.4 as profit for the year. Parents dividend we can take as it is, no change. But subsidiaries dividends, out of, you can remember from this 5,000, 4,000 to parent, can remember, to A limited, it means balance 1,000 to others. It is on NCI. Then you can take the totals. Only the question here is how to calculate this figure. This figure. How to calculate profit attributable to equity holders of parent, total equity at the beginning of the year. Usually how to calculate it? You have to take parents' total profit, not profit, parents' total equity at the beginning of the year plus post-acquisition equity of the subsidiary into group percentage. It will be total equity at the beginning of the year. How to find the profit of NCI? This 2,400 actually it came from this. If you can remember this one. Already we have calculated both. 2,400. How to take it? Profit attributable to NCI from the current year profit. 12,000 into, actually 12,000 plus or minus adjustment. In this question we don't have adjustments. Understand? Thayaraj, 2,400 from the income statement. Profit attributable to NCI and parent. 12,000 into 20%. Alright, that's about this question. Then I did 2 questions. Those are small questions anyway. Look, this is little bit big one. Yeah, let's see this question before moving to others. Let's see this. Right, other operating income of A Limited. Now anyway, the balance sheet, no, sorry, income statement is given as of 31st December 2015. Then Other operating income of A Limited. There is other operating income. This is other operating income. This 4,000. It includes dividend received by. It should be. By the subsidiary, not from parent. Other operating income of A Limited includes the dividend received from B Limited. It should be a B Limited subsidiary company. Got this. During the year, B Limited sold 20,000 worth of goods. If you can remember, if there is any intercompany transaction, what we have to do? Very easy work. Subtract from that and subtract from cost of sales. It's very easy work, no? Intercompany sales. And who is selling party here during the year? If you can remember in the previous question, selling party was parent. Now in this question, selling party is, who is selling party? It's subsidiary, B Limited. B sold goods to parent, OA. A Limited is holding 15,000 worth of goods as at the end of the reporting period. Now how to calculate markup is 33 1/3% on cost. Then what is this price? 15,000 is at selling price. Then you know the formula to calculate unrealized profit. We have done it several times now. How to calculate unrealized profit? 15,000 cost plus cost is 33 cost is 100, margin will be 33.3. It means selling price is 133.3. That's usual formula. So therefore what we have to do? How to find out unrealized profit? Anybody who is online? Calculate unrealized profit in this scenario. Yes, Adil Singh? 3,750. Yes. How to know? Very easy. 15,000 divided by 133.33 into 33.33. It's on an average. Yeah, exactly 3,750. Right. So then what's double entry for unrealized profit? 3,750. Usually we know consolidated stocks credit and debit to subsidiaries retained earnings in this case. Subsidiaries retained earnings means again we have to adjust it to subsidiaries cost of sales. Then I add to, I explained previously, 3,750 to cost of sales. My cost of sales should be increased because closing stock there is overstated. Or you can say actually gross profit should be understated. Therefore I increase. Or if you need, you can subtract separately from gross profit. But better practice is to add it to cost of sales. Now I can summarize it, finalize it. I'll go line by line. Turnover. What is turnover? 70,000 plus 50,000 minus 20,000. It is 100,000. Turnover will be 100,000. I'll write in thousands. What about cost of sales? 30,000 plus 20,000 minus 20 plus 3,750. 33.75. 33,750. This is cost of sales. Then gross profit will be 66,250. Yes, PSN, any clarification you need? Why you can't see presentation? Either Singha, Thayaraj, can't you see the presentation, please? I can no. I think PSN. I think the problem is with your machine or the computer. Presentation can be seen to others. Any problem relating to the presentation? Mm. Can but wish not shared with lecture video. It means I don't know any problem. Then you let me know. Right, I'll carry out like this. What about other income? Other income of 4,000. Is there any adjustment related to this? Question says inside this there is, look here, there is a dividend of 2,000 paid by the subsidiary. Out of this 2,000, how much will be received to parent? 2,000 into what is the acquisition percentage? 80%. It means 80%, 1,600 is included inside this 4,000. Look, 1,600. Why? Out of this 2,000, 1,600 means 80% will be paid to subsidiary. Sorry, parent. So therefore, when it comes to group perspective, what we have to do? We have to subtract how much? This 1,600 as intercompany other income. So then when it comes to group perspective, I'll take only 4,000 minus 1,600 plus 1,200, then here only 3,600. 3,600 means 3.6. I'll write adjustments here. Here I subtracted 20, here I subtracted 20, and I added 3.75, and here I subtracted 1.6. These are adjustments. Then administration, those things remain unchanged. Admin, selling, finance, cost, everything, no change. Therefore, I'll take together. Admin 19, distribution 23, 15 plus 8. Finance cost 5 plus 1.2, it's 6.2. Altogether 48.2. Everything together 48.2. Then 66.25 minus, not minus, other income plus, no, made a mistake. $66.25 plus 3.6 minus 48.2 means profit before tax 21.65. Taxation is 5.4. No change. Sum of that two, it's there. Taxation. Then profit of tax will be 16.25. Now what is next step? We have to split this into two. How? Profit attributable to equity holders of parent and NCI. Tell me how much should be allocated to profit attributable to parent and NCI. How much? Just calculate it and see. Anybody who is online? Just try, people who are online, calculate profit attributable to parent and NCI. Just to see whether you can do it. First you calculate NCI one. How do we calculate NCI one? I told you. Take profit of the subsidiary for the year. Profit of the subsidiary for the year. Do adjustments, plus or minus adjustments, into NCI percentage. Very simple formula. See how much is it? Nobody. What is profit of the subsidiary? Profit of the subsidiary for the year is 12,000. Look, 12,000 minus, can you remember, adjustment? We did one adjustment. Thayaraj, yes. One adjustment, it is unrealized profit. Can you remember? This time unrealized profit was adjusted to subsidiaries retained earnings. Therefore, unrealized profit here is 3,750. This into 20%. Look. Yes. 12,000 minus 3,750 into 0.2. It's 1,650. Here 1,650. In the exam, what you can do, balance you can allocate to others. 1,650 is 1.65. That minus 16,250. 14,600 will be 14.6. 14,600 to parent. How to get 14,600 if you need? Parents' profit? How much it was? 9,600. Yeah. Yes, 9,600, this one. 9,600 plus what else? 12,000 minus 3.75 into 0.8, 6,600. Minus other income. So I'll write it here. How to take 14,600 if we need? 9,600 minus, if you can remember, intercompany other income adjustment. It was done for the parent. 1.6. That plus from this 80% equal 14,600. Look the way we calculate. Understand? Right. Now you should be able to understand how to incorporate. Now actually I did only 4 adjustments up to now. One, splitting profit of tax to profit attributable to parent and NCI. Second one, cancellation of intercompany sales and purchases. Third one, adjustment of unrealized profit when parent sell goods to subsidiary and subsidiary sell goods to parent, both did. And cancellation of other income. It means intercompany dividends. Those are the 4 adjustments I did up to now for the income statement. Right, look this question now. Before that, let's move to this question. Look. Yeah, now actually in this case we don't have intercompany sales and sales, cost of sales, etc. We have started from profit from operations. Then investment income is there, and finance expense is there, profit before tax, income tax, etc. But the new thing here is there is something called other comprehensive income. Already we have learned other comprehensive income in the last semester as well as in this semester. There we have gain on revaluation of property we have. Yes, at the same time, look, other information also there. Read it carefully. Parent made its investment in subsidiary on 1st April 2011 when the statement of financial positions showed the following. On that day, look, when the investment is made on 1st April 2011, they had ordinary share of 25,000, preference share of, look, new one, preference share of 20,000 and reserves of 12,000. Right? The cost of the investment in subsidiary was is 27,700 for 15,000 ordinary shares. With that you can calculate, look, the acquisition percentage. Out of 25,000, you have purchased how much? 15,000 shares. Right? So then 15 over 25 means 60. It means ordinary share acquisition is 60%. Then it will the subsidiary. It's very clear. S will become the subsidiary of parent. Also they purchase. Look, thereafter they say 5,000 preference shares. Out of 20,000 preference shares here. Look. Out of 20,000 preference shares, so parent purchase 5,000 means percentage wise very clear, 25%. Right? Also another one. On 1st April 2011, 50% of subsidiary is low. The finance cost of 7,000 in S relates to both the preference shares, dividend 2,000 and loan interest of 5,000. Look here. There is finance cost of 7,000. Finance cost of 7,000, this one, look. This one. So then finance cost 7,000 includes two things. What are those? It says 2,000 for dividends, 2,000 for dividends and 5,000 for loan stock. Understand? It's preference share dividends. Huh? Look here, very clear. Preference share dividends. Preference share dividends, right. That's all about information. This is about statement of owner's equity. We can go to that later. Now how do you start this? Now from the first row we will do. Is there any adjustment from profit from operations for this row? No. It is, we can take 130. It is done. Understand? The next point, investment income. In this question, there are three types of investment made by parent in subsidiary. Tell me what are the three types of investments? One is bought some shares, ordinary shares. Also parent bought some preference shares. Also parent gave loan. Yes? Yeah. Accordingly you can see how much of dividends has been received, paid by subsidiary to parent relating to ordinary shares. You can see it here, look. Look, what is this? Dividend paid by subsidiary for their ordinary shares. Out of this 5,000, how much will be received to parent? Look, I have written it here. Out of 5,000, 60% means 3,000 will be included in other income of parent. Understand? Out of this 5,000 dividend paid by subsidiary, this is related to ordinary shares. 3,000 should be received to parent. It is included in here other income. Look. This other income, this is first point. This 3,000. Also, preference share dividends. How much is it? Question says there is 2,000 preference shares. Out of this 2,000, parent will get acquisition percentage is, if you can remember, we already calculated 25%. Then 2000 into 25% means how much? 500 will be dividend for preference shares. Also, parent gave 50% of loans to subsidiary. Therefore, out of this 5,000 interest expense of subsidiary, 50% should be paid to whom? Parent. Therefore, it is how much? 2,500. Altogether, it will be equal to, you can see now, 6,000. Then this investment income of 6,000 in parents column comprises three amounts. What are those three amounts? 1,000, preference share dividend of 500, and loan interest income to parent, expense to subsidiary of 6,000. Therefore, nothing should be considered into group column as investment income, because everything is received from where? Received from the subsidiary. Understood? Therefore, nothing to group column. Move to next row. Hope you understood it. There are three types of investment made by parent in subsidiary in this question. That's a difficulty. Understand? Look, the second line. Finance expense. 11 plus 7. But inside this 7,000, what is it? Can you remember? There are two things. 2,000 preference share dividends. Already I have written it here. 2,000 preference share dividends and 5,000 loan interest. Then what should be group expense? Inside that 7,000, then this portion and this portion paid to parent, therefore balance is to others. Therefore, you have to calculate 2,000 into, look, I have written it here, 2,000 into 25% and 5,000 into 50% should be subtracted. That means 2,000, total 3,000. Out of 7,000 finance expense in the subsidiaries column, 3,000 is, it is intercompany. Inside this we have 3,000. Right? So therefore that intercompany expense will be eliminated. So then we take only 15. Look the way that I have recognized. 7,000 minus 3,000. Why 3,000? The preference share dividend and loan interest I have removed. It is paid to parent. Intercompany transactions are eliminated in full. That's a theory we learned. Got it? Then income tax, next row. Profit before tax you can calculate easily. No change. Tax no change. You can take as it is. Then this will be 67. Then what is next step? We have to split into two. Profit attributable to parent and NCI. But before that, we have to do another work. What's it? Here, there is other comprehensive income. Other comprehensive income. Right? Then there is 7 of other comprehensive income. We take as it is. Then total will be 74. Since we have other comprehensive income, we have to split this profit into two. Before other comprehensive income and after comprehensive income. Now look here, this part. This is before adding to other comprehensive income. This profit 67 should be split into two as profit attributable to parent and NCI. Very simple. I told you to calculate NCI first, then balance should be allocated to parent. Easy work, no? How to calculate it? Very simple. Subsidiary is profit for the year plus or minus adjustments. What is subsidiary's profit for the year? 13,000. Is there any adjustment for 13,000 here? In this case, But if you can remember, we subtracted 3000 from this, but we subtracted 3000 from this as well. So that 3000 intercompany things are not considered as adjustments, remember. Therefore, 13 into, look here, 13,000 into 40%, 5,200. 5,200 should be allocated to 5,200. Allocated to NCI and balance to parent. It's very easy. Balance 61.8. 67 minus 5.2. It means 61.8. Understand? So then how to verify the 61.8 if you need? If you need, you can verify it. How to do it? How to verify it? Yes, anybody? Look, is 57. If you can remember, we had one adjustment. Sound? Now is it okay? Can you? So I am using this table mic. I will take this. Right. Hope you can hear now. Excuse me 1 minute. Verification. Verification of 61.8. How to verify it? 57,000 is profit for the year. Then there is adjustment of 3,000, not intercompany one. That is now fine. I think. It is intercompany dividends for ordinary shares. This 3,000. Other 3,000 preference share and loan interest, actually we cancel inside the income statement each other. Understand? But this 3,000 ordinary share dividend is kind of adjustment. Therefore 57 minus 3. Look, I have written it here. 57 minus 3. That plus 13 into 60%. This is equal to 61.8. Hope we did it, I think, now several times. It is enough for that. So the thing is, if there is any total comprehensive, if there is, since there is comprehensive income, how to take that? Now total profit after comprehensive income is 74, right? So now this 74 should be splitted. Understood? Then in that case, what is total profit after comprehensive income? Again, it's easy. 15,000. 15 into 40. From this 40% straight away you can take as NCI portion. It means 6, then balance allocate to. It's very simple work. Balance allocate to the group portion or the parent portion. Then it will be 68. I have given the work in here, the way of calculating that part, this one. Understood? We need to verify 68 total profit after, total group profit after comprehensive income is 74. 74 minus total adjustment of 6, including the what is called intercompany dividends, both Odisha and preferential. Then that will be equal to 68. Right? So hope you can understand it, but I feel like no need to go for a statement of owner's equity. You have the answer there. You just learn it all. Workings also there. I did one thing. No change here even. So therefore I'll take as it is. One more question. Actually, all the answers are on these slides, no? All the answers I have written on these slides. So I don't know what you ask. Everything. What else you need as answers? You are referring, I think, PPT one. Okay, I'll upload it. Don't worry. Usually answers are not appearing. The written ones are not appearing when we convert it to PDF. I don't know still what you say. You can see slides but can't read. It means PDF ones, is it? Hope you need the answers with PDF, not PDF, answers in PPT, not in PDF form, is it? Yes, Thayaraj, what do you need? No worries, I'll first. Yes, okay. I have uploaded PDF ones. Answers are not there, right? But if you refer the lecture, answers are there, right? Actually, I purposely did it because otherwise nobody will see this. If I give all answers and questions, it will be a problem. But at the end of the semester, what I can do, as a help, I'll upload. Otherwise, you have to read all these what is called. You have to watch. You have to see all these videos to find answers. So that's I wanted, because otherwise nobody will see this, no. But anyway, even though I upload all answers with in PPT form, not in PDF form. I'll upload all answers in PPT form. I have those. You will not able to understand if you don't read or if you don't watch these videos. So anyway, I'll do it. Don't worry. Sorry for the inconvenience, but I think Thayaraj, can you read the text that I have written on the screen? Can you read the answers that I wrote? Is it? I don't know. Now, the one student called me and informed that there is problem. So I don't know how to rectify that. Anyway, I'll check it after the break. I'll ask Iran to come and see what has happened. There may be a problem, I think. Okay, now I need to discuss something about associates. There is one question there. I'll upload the answer also for this thing. This is about if time permits, I'll do it. Oh, if I do this question, I'm sure I'll not able to go for associates today. Right, shall we have break for a while and I'll check the problem with Chiran and come back to you. We'll have break for 15 minutes, right? Oh my God. In this question, the following statements of financial position were taken from A Limited, B Limited and C Limited as at 31st December 2015. First point, A Limited purchased 2/3 of equity shares capital of B Limited. 2/3. From this it is 2/3 means 66.6%. And the other one is 25%. Look what has happened. B will become a subsidiary of A Limited, but C will become an associate of A Limited. Look, now we are going to learn a new point. How to incorporate or how to consider an associate into consolidated financial statements. That's what we are trying to learn now. Understand? What he says. On that date, retained earnings also given. 360 in B, and when A purchased 25% on C, retained earnings was 300. Hold a line, please. Huh? If you can't see my writings, I think you have to adjust your settings in your system, usually what should be the way is like the small part of video plus big part of screen on the whiteboard. Which is not so, you have to adjust your system settings. I have uploaded the small video, small size of video plus big white screen, whiteboard. Then you can read all these writings in the whiteboard. Otherwise you can't read. Your problem, I think you have to change your settings. Make small video, my picture, and the big white screen. I have uploaded it like that. I think to others they can see it like that. Right, I'll come back to this. Right. Second point. Included in C Limited's stock. Look, C Limited means associate. Now remember, first point you have to understand, B Limited is a subsidiary and C Limited is an associate. Right? I am referring now second point here. This one. Included in C Limited stocks, that means closing stock. On 31st December 2015 are goods purchased from A Limited. Look, A sold goods to C, even it is an associate. How much? 150. A Limited keeps a markup of 50% on cost when the goods are invoiced to C Limited. Now at the same time, you should be able to calculate unrealized profit. How much is unrealized profit in this case? In the second point, how much is unrealized profit? Just calculate and tell me. Is it so? 50. Just see what is unrealized profit. 50 is wrong, not 50. Now I am not sure whether others are online. Look, 150 is in the purchaser side. It means its purchase price. No, 50 is wrong, not 50. You mean the total unrealized profit like we calculated previously? Yes, it's true. I didn't tell you the adjustment, no? Yeah, by the appearance you can say it's like 50, like we calculated previous. It's true, sorry, right? Reason 150 divided by 150 into 50, yes, it's 50. But remember, yes, it's true, sorry. But remember, it is not the unrealized profit we need to take into the adjustment. Why? C Limited is an associate. Look, in the previous case, if the C Limited is a subsidiary, 50 we can take as adjusting figure for the unrealized profit. But here, the C Limited is an associate. Understood? Therefore, we have to consider only that associate percentage of unrealized profit. Understood? It's kind of new point, new learning. Then from 50, we have to take only how much? 25%. Then how much is it? 12, 15 to 12, 25% means 12.5% should be the unrealized profit in this case. Why? The reason is C Limited is an associate now. Parent sold not to subsidiary. Parent sold to associate. Therefore, 12.5 should be recognized as part of unrealized profit. Then unrealized profit 12.5. What's the double entry now? Oh, I can't write it there because I need to prepare accounts. How do you recognize this double entry, this unrealized profit? But anyway, just remember, unrealized profit will be then 12.5. Remember this figure. I'll tell you how to put the double entry when you do accounts. There is another rupees 120 due from B Limited. Good question. What is the difference between associate and parent? Associate and parent? Can't understand. Parent means the company who has subsidiaries. Associate means if any company purchase less than 40% of shares but more than 25% of shares, we call it an associate. Understand? It means parent has kind of controlling power but not significant influence. Understand what I say? You just go and see my first day slides. There I have mentioned what is a subsidiary, what is a parent, what is an associate, what is a simple investment. There are 4 types of investment we did, if you can remember. First type, simple investment. It means one entity will purchase another entity's share capital less than 25%. It means there is no influence at all into the subsidiary, other entity. Understand? If any entity purchase more than 25% share of another entity but less than 40% of shares, usually we call it, what's it? Less than 50% of shares, we call it usually an associate. It means the buyer will have kind of influence over the other, but it is not significant, but it is not the control. If any company purchase more than 50% of share capital of other company having the controlling power, we call it a subsidiary parent relationship. Understand? Now here look, C Limited is an associate of A Limited. Why? A Limited purchase only 25% share capital of C Limited. It means it is not simple investment, but it has kind of influence and power of A Limited over C Limited. Therefore, we call A Limited is parent, C Limited is an associate. Hope you understood. Right? Are you okay with this now? Shall we move? Right, fine. Then there's trade receivable also. I'll come to that point later. But remember, if there's any associate is not consolidated. Another point you have to remember. Associate is not consolidated. Then when it comes to the group accounts here, I'll draw my cost of control here. This is my cost of control. This is my consolidated retained earnings. This is my where is it? This is my NCI account. This is my subsidiaries retained earnings. RE means retained earnings. and there is new account here. We call it investment in associate. Investment in associate. It is a new account for if there is any associate in a question. You have to prepare a new account called investment in associate. Right? So we'll go line by line. First line. Property, plant and equipment. Is there any adjustment for property, plant and equipment in this question? There is no adjustment relating to PPE. Therefore, we take only these two columns. Actually, we take only these two. I told you investment is associate is not consolidated. Therefore, we will take only this sum of these two, 2200 plus 1200. PPE will be 3400. Understand? It means I didn't add associate columns. What is called total figures, PP figures. Investment, next line, this 1500. It goes to, as usual, we know, where? Cost of control. Can you remember this thing? 1500. What is next? Investment in C. Where to put this on? Investment in C 400. Remember, investment in C means associate. Therefore, this investment we take into investment in associate account as investment. Understand? Go back and see. Next line. Inventories. Is there any adjustment for inventories? There is unrealized profit. But remember that unrealized profit is not from the subsidiary or parent. It is from associate. Associate figures are not consolidated. Therefore, inventory should not be subtracted. I will take 1640 plus 1280, 2920 as inventories. Right? But there is unrealized profit adjustment. Already we have calculated unrealized profit as 12.5. Remember, if there is any unrealized profit from associate, it should be adjusted like this. We should not adjust it to consolidated retained earnings. Understand? So therefore, sorry, made a mistake. We should not adjust it to consolidated inventories. What we should do? This unrealized profit should be adjusted to consolidated retained earnings and investment in associate. Understand? Here you see we should credit into investment in associate 12.5. This is unrealized profit, and debit into consolidated retained earnings 12.5 as unrealized profit. Understand? That's how we should account for unrealized profit at the time of what is called remember one thing. Actually, now in this case, who is the selling party? Who is the selling party? Parent sold it to associate. Understand? The selling party is parent. we should adjust it to, remember, consolidated retained earnings and investment in associates as we did. But remember, it is in this way. Let's assume associates sold goods to parent. Then how do it? If associates sold it to parent, remember, unrealized profit adjustment should be how? Consolidated retained earnings debit, again investor share of unrealized profit, that percentage only, and credit to consolidated inventory. Understand? In that case, you have to remember that. Remember, there are two methods. In the case of unrealized profit, if parent sell to associate, double entry should be consolidated retained earnings debit, investment in associate credit. If associates sell goods to parent, double entry should be consolidated retained earnings debit, consolidated inventory credit. Understand? So remember that point, but it is not in this question. Understood? Right. Let's move again. Next one, about receivables. There is one adjustment for receivables here. Look, this one. Included in trade receivable of A Limited are 120 received due from B Limited and 35 due from C Limited. Anyway, it's very clear. This 120 should be eliminated in full. This intercompany receivable from here, receivable from subsidiary, and we have to subtract from payable here. From this we have to subtract 120. This cancellation of intercompany receivable and payable, already we have done it I think last week and 1 week before. Understand? So then intercompany receivable credit, my mistake, accounts receivable credit and accounts payable debit, 120, 120. We have cancelled intercompany. Intercompany means in between parent and subsidiary. We have cancellation each other. We have done the cancellation for each other. Then what about this 35? And 35 due from C Limited. It is associate. Then what do you think? We subtract 35 also from this. But remember, we have to recognize it as separate receivable from associate. It is another compulsory requirement. So then, when it comes to receivable, one thing, there are two things here. If there is any receivable from parent and subsidiary, it should be eliminated in full. Look here, 1800 minus 120 plus 750 minus 35, then it will be 2395. Account receivable 120 minus and minus 35. Answer will be 2395. 2395. But that receivable should be recognized as receivable from associate. Associate, it should be recognized separately as 35. It's another compulsory requirement. Understand? I subtracted from consolidated receivables and recognized that separate receivable from associate. That's about second line. Third line, cash, it's very clear. 160 plus 95. 255. That's all about asset side. Understand? What about next? Equity, shares parents, this 2400 we take into cost of control. Made a mistake. This goes to consolidated balance sheet. I made a mistake, sorry. Here we need to take only 900. Share capital. Next one, then we have taken this. We don't console these figures. We don't take. These figures we don't take. Then retained earnings consolidated 3000 and other one is 1200. We know how to put it. Here 3000. Here 1000, subsidiaries 1200. Those are brought forward balances. Current liabilities now no change, we can take as it is. 1720 plus 920 minus 120, it's 2520. 2520. Tax payable no change, 275 and 220, 495. Thus dividend proposed balance here 240. And out of this 150, how much we will get? We purchase 1/3, no? Therefore, actually, it is kind of intercompany thing again. Now, 150 should not be 100 should not be recognized. Dividend. Then this dividend payable account debit. This dividend payable account debit 100 and credit it to consolidated retained earnings as 100. This is from dividend. Dividend from subsidiary 100. Then finally here it will be only from this we have to subtract 100. Why? Intercompany dividend should be subtracted, then 240 plus 50, it will be 290. We take 240 plus 50, 290, right? Right, that's all about figures. Anything else? Now what is pre-acquisition retained earnings? Look, 360 is pre-acquisition retained earnings. So therefore I'll charge that one from this 360. All pre-acquisition retained earnings should be charged to, yeah, you know, cost of control account. This is retained earnings. 360. Yes, payable to 120. Yeah, this one I subtracted actually. Here 120 I subtracted. PSN is asking about this thing actually. Yes, look, 120 I have subtracted. Payable to parent. Therefore, it is not a payable. Therefore, I subtracted. Now look, 1720 plus 920 minus 120. Then it is 2520. Understand? Here, this one. It's 2520. Okay, right, fine. We'll go ahead. Then pre-acquisition retained earnings I already transferred. Then what is about this post-acquisition retained earnings? 1200 minus 360 is 840. 840 should be split into how? 2. How to split it? As NCI and consolidated retained earnings. Out of 840, what is acquisition percentage? 2/3. 840 divided by 3 into 2. 560. 560 we charge to, this is from retained earnings, 560 and balance to NCI 280. Here 280 we charge from retained earnings. Right? Then it is done. What else? Then this account will be closed. This is done now. Completed. Anything else? Hope now you can. One more thing. In this question, examinee is silent about fair value of NCI. How do you calculate fair value of NCI if it is not given? Anybody? Can you calculate fair value of NCI of relating to subsidiary B Limited? I told you several methods to calculate fair value of NCI. Nobody can remember now how to calculate fair value of NCI. I told you, if it is not given, there are different methods. One, if the market price per share is given, you can calculate based on that. Other method is, the market price also not available, what you can do? Take total equity at the date of acquisition. Take total, equity at the, exactly, Thayaraj, correct. Total equity at the date of acquisition into NCI percentage, it's true. So then what is total equity at the date of acquisition? You can see it in your cost of control. Look, this is. Easily you can find it. Now 900 plus 360, 1260, that into NCI percentage is 1/3 divided by 3. It will be 420. 1260 into 1/3. It is fair value of NCI. Then it is 420 cost of control debit, credit, NCI account credit 420. Hope you can remember double entry for fair value of NCI. Cost of control debit, NCI account credit. Understand? Is done. Right. One more point. Now here we have associate. There are two learning principles we learn in this question relating to associates. One principle, I told you, we go in equity method, but remember, we don't add associate figures into consolidated or group accounts. We didn't add. One point. Also, if there is any investment in associate, we have to prepare a separate account called investment in associate account. If there is any unrealized profit arise from associate, how do you adjust it? If parent sell goods to subsidiary, so not subsidiary, made a mistake. If parent sell goods to associate, double entry should be consolidated retained earnings debit, investment in associate credit. That's what we practice in this question. But I told you, if associates sell goods to parent, double entry should be consolidated retained earnings debit, group inventory credit. That part is not in this question, right? Then we are in the investment associate. We need to learn another point relating to investment in associate. PSN is asking how to adjust dividend proposed. Well, I have adjusted dividend proposed already. Look here. There is dividend proposed of, now anyway we don't take this 24 associate. I'm not sure whether you are referring associate dividend dividend proposed or the subsidiaries dividend proposed. PSN, is it associate C limited subsidiary? Yeah, right, fine. Subsidiary is dividend proposed. You take like this. Right, now look here. There's dividend payable proposed of 150. Out of this, two-third should be received to parent. Therefore, I have subtracted it from this. Look, 100 means out of 150, two-third. It is intercompany dividend. Therefore, I removed it from this. Double N should be dividend proposed, group dividend proposed debit. Debit means it goes down, and credit it to. Look here. Already I have adjusted. This is dividend from subsidiary. That 100. Understand? Hope now you got the point. That's a double entry for dividend proposed. One more learning point relating to associate. We should take, actually we have not incorporated now. Look, this is an investment made in associate. This is something related to unrealized profit. Now we should do one adjustment for associate. We have to calculate increase in share of equity. Increase in share of equity in associate. How to calculate increase in share of equity from associate? There is a formula for this. You take total equity at the acquisition date of the associate. Total equity at the date of acquisition of the associate minus, I made a mistake, total equity on the reporting date minus total equity at the date of acquisition. Understand? We need to calculate increase in share of associate. I don't have enough space to write here. I didn't keep blank slide, that's the reason. Remember, I'll write somewhere here using different color. Increase in share of profit from associate. How to calculate? You take equity every day after 2 hours something happened. We can't save what we type in the system. Then increase in share of equity is how much? Equity on reporting date minus equity on acquisition date. I wrote a formula there. equity on the reporting date minus equity on the acquisition date. That is increase in share of profit from associate. Then how to calculate it? Equity on the acquisition date, how much? Just see how much is it. We had 800 capital here, and at the date of acquisition we had 300, and it is 800 plus 300 is then 1100 minus on the reporting date it was how much now? 800 plus 440. How much? 1240. It is minus. What is answer? Answer is increase in equity is 1240 minus 1100. 140. 140 into how much we get? Only 25%. Increase in share of equity from associate is 35. This adjustment should be made separately in associate cases. Understand? Increase in share of associate should be accounted as investment in associate debit 35. Investment in associate debit 35 and credit to consolidated retained earnings. We call it investment, increase share of equity from associate. Increase in share of profit from associate is 35. Understand? So then, yes, now today also the problem is I can't write. We can find now the goodwill. Here, how much is the goodwill? 1500 plus 420 minus 900 minus 360. Goodwill is 660. I'll take goodwill here as 660. I can close now the NCI account. NCI balance is how much? 280 plus 420, 700. What is balance in the investment in associate? 400 investment plus increase in equity 35 minus 12.5, 420. Remember another one. We have to take this one here. Investment in associate is, what is the balance? 422.5. We have taken the balance sheet as investment in associate. And what else? What else? Consolidated retained earnings. This is group. How much it is? 3000 plus 100 plus 560 minus 12.5. 3647.5. Now this should be balanced. Let's see. That side 10,860.75. The other side, let's see. I think my calculation is wrong. 87.5, no? 10,000, yeah, 87.5. Yeah, it should be this difference. Is my consolidated return is wrong? 3000 plus 100 plus 560 minus 12.5. It's 3647.5, but something wrong. I'll check it. Anything wrong in my calculation? Yes, sorry, I didn't add this 35. Yes, it's true. This balance is wrong. Yes. I have not added because I have written it there down. 35 also should be added actually for this. Yeah, it's true. Then it will be 3000 plus 100 plus 560 plus 35 minus 12.5. Then it will be 3682.5. No? Now it is balanced. Balanced by 187. Yes, that balance now. $187.5. It is balanced now. Here what I wanted to show you, how to incorporate investment in associate into books of accounts. Hope this is enough because I have another question here, but I don't think that we have enough time. It takes more than 1 hour. It's very big one. If time permits, I'll do it next week. You just try this question and come for the next class. I'll discuss it next week. Right? So I have given one question there. I'll discuss this question because it has everything that we have learned up to now. In this question we have statement of financial position, statement income statement, and all adjustments that we already learned for balance sheet as well as income statement. Also we have associate. Everything together we have in this example, last example. You just try at home and come for next class. Right? Just to summarize what we have learned up to now, I already summarized the things for the balance sheet. If you can remember one day, I summarized all double entries and all adjustments relating to statement of financial position. Now I am trying to summarize all adjustments relating to income statement. Only few we learned. Actually, we didn't do big things for income statement. We learn only few adjustments for income statement, but for the balance sheet or the statement of financial position, we learn I think more than 10 adjustments. For income statement, first learning point, if you can remember, I am going to summarize everything now, especially for income statement part, because I have already summarized this thing to the statement of financial position part. If you can remember, for the income statement, we learn only one adjustment. As usual, we do line by line consolidation. Profit after tax, or we call it profit for the year, should be split into two, as profit attributable to parent and NCI. Understand? It was the first adjustment we learned for income statement from the question we did last week. How do you split profit attributable to parent and NCI? For the examination purpose, I told you, first you find out the NCI portion. I am referring now this part. How to show this area, right? So then first you allocate NCI, thereafter you can find the profit attributable to parent. How do you take NCI? Take profit for the profit of the subsidiary for the year, that do necessary adjustments if you have into NCI percentage. It will be NCI portion then balance portion should be allocated. I am referring now this area. Balance portion should be allocated to the parent. Understand? So that's one point. In this question we learn how to incorporate intercompany sales and purchases. As that question. Yeah, here. There we learn intercompany sales and purchases should be eliminated in full. Also we learn if there is any unrealized profit, if parent sell it to subsidiary, we add to cost of sales, or subsidiary parent sell to parent, even we do the same, we add to cost of sales. Very simply, as second and third learning point, intercompany sales and purchases should be eliminated in full. It means from turnover you have to subtract total intercompany sales, from cost of sales we have to subtract total intercompany sales. At the same time, if there is any unrealized profit related to this sale of inventories, it should be added to cost of sales. Then it is the third point. As fourth point, I told you, if there is any intercompany dividend income, it should be eliminated in full. Therefore, from other income we have to subtract, also from dividends we have to subtract. You can remember in this question, we learn three types of intercompany dividends. Intercompany income, look here. There are three types: preference share dividends, loan interest, and ordinary share dividends. All are intercompany transactions. Therefore, total investment income we eliminated in this question 6,000, 3,000 and 3,000, it means 500 for preference share dividends, and loan interest we removed from finance expense of this 7,000, and balance we removed from, if you can remember, from this amount, from this 5,000, if you can remember, right? So that is fourth adjustment we learned. They are actually not four, there is another one, altogether 5. And what else? Also we learn how to prepare statement of owner's equity. I told you at the beginning of the period, we have to find out total equity balance. Can you prepare this thing if you hope you can remember? In this question, we are not there. Yeah, look here. When you prepare a statement of owner's equity, you take total equity at the beginning of the year. How to take group equity? Take total equity at the beginning of the year of the parent plus take post-acquisition equity of the subsidiary. It will be beginning equity of the group. Also take as it is NCI, total subsidiaries equity into NCI percentage, it will be NCI portion. Profit for the year, anyway we find it from the income statement as profit attributable to parent and NCI, take as it is, and the dividend component. Therefore we just had rough idea about calculation of statement of owner's equity. That's all we did for income statement, if you can remember. Then finally today I did something about small part of associate. At least you should understand if there is any associate, you should not add those figures to group accounts. We don't add those figures into group accounts. Right? We take only the parent and subsidiary. That is what we did from this question, test number 33. Associate figures are not added to group accounts, group columns, but remember we have to prepare a separate account called investment in associate. We need to do one adjustment for investment in associate. We have to calculate post-acquisition equity or increase in share of equity from the associate. How to calculate increase in share of equity on the associate? Here I have written, look. Equity on the reporting date of the associate minus equity on the acquisition date of the associate. Look here, that's what I have done here. Equity on the reporting date is 1240, equity on the acquisition date 1100, increase is 140, that into 25%, it is 35. Then increase in share of equity we account like investment in associate debit, consolidated retained earnings credit. Understood? It is another one. Also one more adjustment we learn, two more adjustments we learn in related to investment in associate. One is if there is any unrealized profit arise from the associate. If parent sell goods to subsidiary, I told you consolidated retained earnings debit, investment in associate credit. If associate sell goods to subsidiary, made mistake. If associate sell goods to parent, consolidated retained earnings debit, consolidated inventory credit, remember. But in this case, what happens in this question, the appearance question, parent sold goods to associate. Therefore, we recorded it as, oh look here, consolidated retained earnings debit, investment in associate credit, right? Also, if there is any intercompany receivable or payable from associate, it should be eliminated in full. If there is any receivable from associate, it should be subtracted. Look here, I have subtracted. But I recorded it as separate receivable in my balance sheet. It is a requirement of cancellation of intercompany receivable and payable. But we don't cancel this receivable from the payables of the associate because we don't incorporate it. Understand? So then that's all about the summary for the day. And with this I'll conclude the group accounts part. But if I feel that it is essential and if you make any request to do this question, the last one I'll do probably at the beginning of the next week. And we will, I think this is 10th week, I need to give you assignment, already I have given. I'll finalize your assignment work and let you know within this week, sure. Right? So then I hope we have completed group accounts, almost close to 50% of marks for the examination from group accounts. So therefore you have to study these questions and come for the exam. But I expect to do at least small revision at the end of the semester as a last week, maybe 1 week before. Then Mudit will take another 3 sessions and I have another 2 sessions. We will see what we can do for this thing within next couple of weeks. Okay. So, but remember for the group accounts I spent, as I remember, 4 weeks. Yes, Thayaraj, I'll let you know about the assignment work. It will be a small one, sure, this time. It won't be a big one. I'll finalize it and give it within this week, sure. Right? But remember, you have to work on this group accounts thing very soon, because otherwise you will forget everything. Examination is not easy like last semester. Therefore, you have to work on this. Right? I don't know why people are not coming now for lectures, but remember you have to follow it. That's our requirement finally. Then we'll see next week, and thereafter I'll inform about assignment within next week. Thank you.